Okay, auditing. It feels like I haven't talked about this class in a while. So let's get started with we're going to go today, page 923 to page 927. Okay. So we want to design our substantive procedures. Okay. So we're going to do substantive testing. So the main focus with the substantive testing is the gross amount that's, well, in this case, AR, due from customers on credit sales and the related allowance for doubtful accounts. Okay. So again, our focus right now is sales and AR. Okay. So we want to go test those credit sales, okay, and then also what's that going to do in turn is going to help us prove that sales number as well. So we're going to look on the table here at page 9.5 on page 923 and 924. So what that'll do is this table will provide it's an example of possible procedures, substantive procedures for accounts receivable assertions. So if we were doing an audit, okay, what we would do is we would make our own substantive procedure checklist for each account. So say for AR, for cash, inventory, and they're all going to be different, okay, because we're going to have a different focus on each. So let's just look at the table 9.5, okay, and notice, okay, it says initial procedures. So now this is an example of an audit program, okay, so it's telling the auditor what to look at. Okay. Now, again, it's not what you want to do is you want to know your client. So some things you might not do, okay, and you wouldn't even include it. Okay, you're going to customize this audit procedure, these substantive audit procedures for your client. Okay. So let's just look at the first one, initial procedure. Perform initial procedures on AR balances and records that will be subject to further testing. So the first thing we want to do for initial procedure, trace the opening balance for accounts receivable and related allowance to the previous year's working papers. Okay, so all we're going to do there is we're going to say to the client, can you give me your ARGL? Okay, and can you give me your allowance for doubtful accounts? Okay, so for the current year. The very first day of the current year. Why? Because we want to tie those into our numbers from the prior year to make sure they didn't play games. Okay, make an adjustment on that first day when we left. Okay. So we'll say that yes, we did this work. Okay, and we would tie it in. Tie it in means we would reference or we would show the work in our audit file. Review activity in the general ledger accounts for accounts receivable and related allowance, and investigate entries that appear unusual in amount or source. So you're going to go in. That's why you've asked for a printout of the GL for AR. Okay. So you're going to eyeball it. Okay. Do things look right? Maybe you want to highlight transactions. You know what? Something just doesn't agree here. Okay. And then you're just going to look. Okay. And then you're going to get into step 2, analytical procedures. Okay. We want to perform analytical procedures, determine expectations, compare current and prior year's balances. That's easy enough to do. Current year, prior year, why the changes? Do we have to look into these changes? Okay. Now maybe we want to look at ratios such as gross profit, days sales, and AR to see is collectability an issue. Okay. Again, we're just doing all types of tests. Then we go to step 3, test the details of transactions. Okay. And again, it's all laid out for us. So again, with those initial procedures, now we are on, and you can just tie that in, this section here up to page 925. Okay, so we'll trace opening balances. Okay, again, we're going to review any activity. We're going to agree AR to the trial balance, again, because the general ledger may not agree to the trial balance. And now, again, we can look at that working paper that was provided in the textbook. We'll go through to analytical procedures. Okay. So if I look at this age trial balance, that's on page 926. Okay. Well, I'm going to show you I'm just going to look at it and say, okay, well, what am I concerned with? Well, anything that's current, I wouldn't have an issue with. But I want to look at, okay, Ace Engineering. Why do they have so much high AR? Over 30 days, over 60 days, over 90 days. I don't even know if the over 90 days would be collectible. Now, again, we could tie that in later, and we could look at the age receivable listing 2 months down the road. So this is December 31st, 2020. If we looked at February 28th, 2020, and seen some of these amounts were cleared off, especially the old amounts, we wouldn't have a valuation issue there. Okay? But again, right now, we're just looking at, analytically, has it increased from the prior year? Now, in this case here, okay, there haven't been any adjustments, so they made the accountant, the auditors made one adjustment because they didn't like. If you look at Judd Limited, okay, adjustments 9,000 for 16.96. So maybe that amount they determined was uncollectible. Okay, so again, this is just saying, okay, we're going to test this thing later. Okay, but what we want to do is we want to go and just eyeball it. Are there any amounts that stick out to us? Now you can see how they've tested this in the past. So when they talk about test of details of transactions and test of details of balances, that's what these little tick marks mean. Okay? Let's just look at this squiggly line. Aging verified by examining transaction dates of unpaid sales invoices and subsidiary ledger. So if we go and test sales beforehand and we thought the sales were accurate, now we want to go look at, okay, well, if the sale was actually made, is that AR amount now accurate? Okay. So that's an example then of an age trial balance on page 926. Again, we've made those as well in FA1B, and we talked about it in FA2, I believe. Okay. Now, with these analytical procedures, again, this is a little bit of a repeat, but we want to review the understanding of the entity, okay, and focus on any anticipated changes expected with sales and AR. Okay. We want to identify absolute change amounts between this year and the past year, so whether it's positive or negative, we only care about the actual number difference. Okay. Then we might want to do a more sophisticated relationship test. Okay, so we might want to look at ratios. Okay? We want to look at maybe collection period, trend analysis. So if they have more AR this year, and it's taking them, instead of 30 days to collect, it's taking them 106 days to collect, we have an issue. Okay? We don't know if that amount is accurate or not, because we might have a valuation issue there. Okay? Again, those are just some steps that we can take. Again, just looking at the numbers. We haven't even done any testing yet. Okay? And then lastly, before we break today, we're going to test the details of these transactions. Okay? So this ends on page 927. So we want to vouch AR, okay, to supporting transactions. So we're going to take a sample. We're going to test sales cutoff at the end of the period. Okay, so that's going to determine, or help us determine, that we've reported the sales in the correct period, and then that AR is reported in the correct period. Okay. And we'll test cash receipts for cutoff. Again, cutoff was reported in the correct period. Okay, so in this case here, if we're looking at AR, okay, we're going to go and pull a sample of certain customers, and we're going to try and prove that balance. If we can prove that balance, we've tested the transaction, and we can say, yes, that amount of 610,119 is accurate. We don't think it'll be materially misstated. Okay? That's basically what we're trying to do. Okay. All right, so that wraps up today's class. Just two questions were assigned. Okay, so take a look at your email, and we will go from there. So that's it for today. Again, we're just getting into testing now, designing substantive procedures for AR and All right, we'll talk to you tomorrow.